Welcome to TradeTheMBI.com. This is John. This report is for the 23rd of January. Well, and we continue to just move across sideways. We had a nice little punch up, but then we got some intraday little sell signals. We're getting a warning, though, with this lower shakeout. We're going to need to see the shakeout start to move back up again. Otherwise, we're going to have a divergence, in which case we would look for what we're starting to see here, the beginning of a separation between green moving lower and cyan moving up. It's not really doing anything dramatically yet. We do have short-term buyers, which look strong enough here to hold things kind of where they're at. So this is sort of that ambivalence that I talked about, where you just kind of get a little bit of sideways action back and forth and ease through it. Nothing major's happening, but I think there's like that poised moment waiting just in case something does happen. Euro again flatlining, not going anywhere either. And this is interesting because of the oil decline. It's anti-inflation, but the concern is it also a reflection of lack of demand from an oil. I know we have the situation in China growing with the whole coronavirus, so that could escalate and cause a little potential panic over there, but I don't know that it's going to have that much impact on what goes on in the U.S. Unless it really starts to expand if we have more cases that end up here or in the U.S. Gold, just hovering along again. Everyone's waiting for a catalyst, some kind of movement, and then we're going to prepare for end of month setup. From the intraday standpoint, we ended up with our nice P2s. The X's came in with this strong dip of orange below. We had the steel in no reset, but we were in that P2 zone, which is that between negative 13 and negative 7.5 on the DOC, and shot up nicely from there, and then just kind of went across. This first DOC spread wasn't that great because, of course, you're above the 15 line here on the magenta from the shakeout, so you know that any dip isn't going to be, well, it's just not going to last. It may move enough, and in which case this did. It moved a few points, so, I mean, it's nothing wrong with taking that as long as you know that when you get that crossover, that's, you know, your end point, and you've got to think that, you know, you could move back to the highs or create new ones. As long as your entry is close to the highs or in the upper side of the move, what you don't want to be doing is entering that down at the bottom of it towards the 76. You want to take advantage of any bounce that goes through. When the next one came through, same situation with the DOC spread, but what is key about that one is you moved up to the zero line and then rejected off of it. The fact that it turned around, it wasn't really all that dramatic. I mean, you just had this kind of flat short thing, but with the cyan just not really creating any significant expression in the rise of the DOC red. What happened here was once you get the green back above, you had that pop, but then that DOC spread again right near the 0 point. This one was much stronger rejection and that clear line break, and that led to the fillback of the positive extremes from right over here. Boom. And then we sort of consolidated. This was a decent P2 setup. The only problem was it was short-lived. Didn't even get near the zero, barely got over the 7.5 with the red on the DOC, and then retreated. Now, off this first dip, when you had this little punch, you knew that we were still going to be revisiting that because of the dip below the red line. So this become powerful little, like, you know, warning signs in advance. And as we accelerate moving forward, clean DOC spread, no steel reset, you know, coming dramatically below and then back above. It kind of stayed above that red, so there was a good continuation read within that. This was a fairly decent bounce down, but again, when that's below that negative 13.5, sometimes you get a sharp bounce, but with these dips below the red line, you knew you were still going to come and revisit it, and that's exactly what happened after that. It was pretty quick before it did it. Now, we've stabilized down here, and it sort of got a little wild in the post hours, but this latest P2 with shakeout down moving to the positive, big change. So that should show some more continuation. We also have rising gold. The problem with that, rising gold below the 50%, if you don't get above that 50% line, real problem. And what we're going to see is here falling Morganacci, the 100%. Price is going to want to move towards that 100%. So the question really will be whether or not we get a broader sell signal before that reaches it. You may just get a little more of a sideways consolidation. So that's kind of what we're looking at the start of things. But don't need to revisit the lows because we've already did that once we got to here. We had a little pop and then it made a lower low. So this is clean from that standpoint. Just the problem is with that rising gold that's indicated here with the little gold dots pointing up. It's just not going to do anything unless you can get well above that 50%. And even right now, we're still within a short configuration with the cyan above and green falling down below. Now you get steel moving right below, so that should express a little bit of weakness as we continue through the pre-market before the actual open. So we'll continue to follow it. As always, though, if there's something unique, I will certainly let you know. Trade well. We'll talk again later.